Okay, Pam, how you doing?
Hey,
Are we ready to do this? You want to talk about the PPP and the EIDL? Okay. I'm going to put up some slides because, I can, I think, maybe. We're going to try this and see how it works. Okay, are we on?
I think we're good.
Look at that. It's our first big deal. All right. Sometimes you need a win. All right. So we want to talk about what's going on with money right now. Where is it available? What's happening? Is your money ever coming back? Or I'm sorry, is your money ever going to get here, whether it's from the EIDL or the PPP or even the new loan that they just announced 4 hours ago? And then how to deal with the money once it gets here. So let's do a quick review of the PPP. So the CARES Act is the legislation that brought this into effect. And the PPP was Paycheck Protection Program, 2.5 times the average monthly 2019 payroll, a $10 million limit, 4% interest rate, repayment begins in 6 to 12 months, and you can't have an EIDL and a PPP. Is that the way you understood it, Pam?
Yep.
Okay, but like many things, it didn't say that way. I heard someone saying that people were legislating on the fly today. And I think that's a good description, because here's kind of what we ended up with. Yes, in fact, it's 2.5 times your average monthly 2019 payroll or a rolling 12-month payroll, whichever one. So that was pretty correct. The $10 million limit stayed. 4% interest went away. And they said it's going to be 0.5% of interest. And then that went away and they settled on 1%. The repayment, interest and principal payments were supposed to begin in 6 to 12 months. They just said, nope, 6 months. And then the final one said you can't have a PPP and an EIDL. For those of you that don't remember, an EIDL loan is an economic injury disaster loan, right, Pam?
Mm-hmm. Yes. Mm-hmm.
So you couldn't have a PPP and an EIDL. That is now not true. They just can't be used for the same expenses. So that's that one. Now let's talk about the EIDL. It was designed to be used for operating cash. Pam, how would you define operating cash?
As long as you're not buying an asset, right? Like a machine, a car, or any of those kind of things. I think most of the other stuff is operating cash, whether that's for inventory or for employee costs.
Okay. But you can also use it to pay rent and utility and office supplies.
Yes, that's an operating expense.
Okay.
So I think of operating cash as a lot of variable expenses as opposed to fixed expenses.
Okay. The next thing was it's a $10,000 grant. There is a $10,000 grant feature of the EIDL that will be funded in 3 days. Everybody stop groaning. You can get up to $2 million. So the PPP, you could get 10. The EIDL, you could get 2. Repayment begins in 12 months. And the interest rate is 3.75%. So here's what's interesting. Was it Monday or Tuesday that we started hearing rumors about the EIDL?
Yes.
Oh, wait, hold on. We do have one more. The term was 20 to 30 years. So like Monday or Tuesday, I started hearing rumors, and I think I must have gotten on the phone on Wednesday. I now have a new BFF.
I'm jealous.
I know. You want Nancy's phone number. So Nancy is this lovely lady that I befriended at the SBA because we had so many questions about this. I'm like, how do they define operating cash? And how much operating cash? Are you going to give us a week, a month, a year? And, these grants don't seem to be funded in 10 days. And here's what she told me. It is, in fact, for operating cash. It's not getting funded in 3 days. The legislation says so, but let's face it, they are legislating on the fly, and the SBA, as of yesterday, as of Wednesday, the SBA had processed as many loans for the PPP as they do in an average 14 years. 14 years in 10 days.
Yeah, that's insane.
Isn't it? No wonder we don't know what's going on. They don't know what's going on.
Your new BFF needs a vacation.
Yeah, no kidding. And though I will say, y'all, she was so nice. And she said that virtually everyone that called her, they were all desperate and they were all nice, which I'm so glad because,
because you can get cranky during these desperate days.
Yeah, you really can. So I thought that was great. Okay. So we started talking about the $10,000 grant, and I'm like, what's that based on? $1,000 per FTE, full-time equivalent. We'll talk about FTEs in a few minutes. The other really interesting thing she said was, no, it is not 2 million, max of 15,000 plus whatever your grant is. So that's a huge difference. Interestingly, today, the minority speaker of the House came out and said that the Republicans are willing to put some more money into EIDL. They've been talking about funding the PPP. We'll talk about that in a minute, but that might make a difference. Interestingly, we have a client that got an email saying that they were eligible for up to 500,000. So I don't get it. By the way, the operating cash, the calculation for operating cash was it 2 months? Hold on, now I can't remember. I say these things. 2 months of working capital up to 15,000.
So working capital is current assets minus current liabilities?
Don't know. I got the impression that it was the operating cash, like 2.5 times what it took for you to run a month.
Okay.
All right. So repayment begins in 12 months. Yay, they kept that the same. Interest rate is still at 3.5%, and the term is 30 years.
So it's like a mortgage.
It is a mortgage, a $15,000 mortgage. We really crack ourselves up. So,
can you build an outhouse for that kind of money?
Not in Texas. Actually, maybe in Texas, you might be able to build.
Let's keep going. I digress.
So all of these things are really confusing. So we created a better comparison.
So let me understand correctly that you can still go online and apply for the EIDL today.
You can apply for the EIDL today. It is open. The application takes, 10 minutes?
Yeah, tops. Yeah.
It was really fast. Because I got to tell you, I walk our talk. So I have done all the things that are in here. I've actually done many of them. I did, Pam, with you and the rest of the team on the phone so that we would all understand what our clients were going through.
And the money just shows up in people's bank accounts with the tagline SBA. There's no documents that come with it. There's no, no loan agreement. It just,
Well, yeah, that's the grant, though. Nancy gave me some great insight into that. But let's look at these two in comparison. So the PPP, 2.5 times your average 2019 or your rolling 2020 payroll, monthly payroll, 1% interest rate, 100% forgivable if you spend it on the right things, and we'll go into what those are. 2-year repayment, no payments for the first 6 months, and you apply through your bank. The EIDL, so the EIDL is 2 months of operating cash or 15,000. We're not sure. Nancy's saying 15,000, 3.75% interest rate, $1,000 per full-time equivalent grant up to $10,000, 30-year repayment, no payment for 12 months, and you get it direct through the SBA. All right, are we good on that?
yep.
There are some things that I've put in this presentation that aren't really meant to be looked at right now. And the next slide is one of those. We'll send out all the slides. We'll send out the presentation afterwards so that people can go through it. And I wanted you to have it because I thought it was a great comparison of the two products. So the uses, the collateral, the forgiveness, and I think the collateral is important. There is no collateral for the PPP. The collateral for the EIDL is none for 200,000 or less. By the way, that used to be 250,000, way back when, last week. We're now at 200. Forgiveness, 100% on the PPP. The 10,000, any part of that advance grant with the EIDL is going to be forgiven. There are a couple of caveats on that, which we'll talk about. The amounts, the terms, how long before you have to make the first payment, who the eligible entities are, and where to get one. So I just liked this. Yeah. All right. Let's talk about the EIDL developments. Again, this is my good friend Nancy. So they're running low on money, which means that you only can get 25,000 max. So if you have 10 FTEs, 10 full-time equivalent employees, you can get $1,000 per employee plus the $15,000 actual EIDL loan. Here is the process. So Pam, you mentioned a little while ago that the money for the grant is just kind of showing up. Yeah, so Nancy was like, yeah, that's not how it's supposed to go. Here's how it's supposed to work.
Really? Something's not going as planned?
Shocker. All right, so you're supposed to get 2 emails. The first email is all about review and authorize. And what this does is it wants you to review your application. So Pam, remind me what was on the application. It was the company name.
Right. So you had to make certain representations that you weren't in certain lines of business. You had to list your sales, your cost of goods sold, your number of employees. But most of it was taken up with representations.
Yeah. And when you say representations, things like, I'm not in the sex trade.
Right.
I'm not a drug dealer.
And only 25% of your revenue came from gambling.
Oh yeah. Well, I mean, friend of my mother's married a professional gambler.
He's not eligible, I'm telling you.
Not eligible. He was, this is totally off topic, but entertaining. When they made the movie Rounders, they asked all these professional poker players to be in the movie, and they asked him to be in the movie. And his father-in-law was like, you're not going to be in this movie. So he became a paid consultant, and he was the lead consultant on what it was like to be a professional poker player.
There you go.
Yeah.
So first email.
So the first email is all about review and authorize. Review what's on your application to make sure it's correct. Make sure that they have the right contact information. Make sure the bank account is correct. But it's also that the person who is on the application is actually authorized to make decisions on behalf of the company. So they want to make sure they've got the right person. So for instance, we had a couple of clients where we filled out their EIDL loan for them. And so we were on that application, but we need to make sure that the client is the one that gets the further communication, because they're the only ones that can sign the papers.
Mhm.
Okay, the second email is fascinating. So what it does is you get an email that invites you to your portal, and they create a portal for every company. And what it tells you is who your assigned loan officer is, how much money you qualify for. And this is where we get into that I'm not quite sure I understand, because like I said, we had that client that said 3 days ago, got an email saying, you're authorized to borrow up to $500,000. But according to my BFF, Nancy, it's 15. It tells you the amount of the advance. As you said, Pam, people are usually getting the advance long before they get the email to invite them to the portal. And here's where it gets interesting. They're going to ask you to upload some documents to kind of prove out what was on your application. But the next step is you actually talk to your loan officer. And you have to discuss what you're experiencing right now, what your business needs are, and how the SBA can help. And what I think is so interesting about this is the PPP, you really didn't have to show any kind of economic injury. Interestingly, the EIDL loan, the economic injury disaster loan, I think you're going to have to. And I know that for some of our clients, they've been listening to us over the past 3 months, 6 months, year, 5 years, however long they've been working with us, and they had good cash reserves. And they may not be facing a huge economic disaster. Yet, correct. However, I'm wondering what those questions are going to be. So I think I think you're going to have to answer more questions than you did with the PPP. And it sounds like there's some judgment calls maybe that the loan officer gets to make. Again,
But these are loan officers that are employees of the SBA, or these are loan officers that are with a bank, a financial institution?
Loan officers with the SBA.
Okay.
Okay. And then the last thing, again, probably the last time I'm going to bring up my BFF, Nancy. So they are just about to start processing the applications that were submitted on 3/30. So there was an EIDL loan available, an EIDL application available before that. A lot of people filled it in. Our client who has gotten the emails filled it out before 3:30. On 3:30, they relaunched a new, more streamlined app. And so they're working through the backlog of those first people right now. And Nancy said that starting late this week, so I talked to her on Wednesday, so like Friday, maybe early next week, they're going to start processing from 3:30, and they are processing in order received. So there's a term in accounting, it's FIFO, first in, first out. So if you haven't done the EIDL application yet, do it. Okay, PPP developments. I think you've all read, they ran out of money Wednesday night. Okay. The Republicans are asking for $250 billion to refund it. The Democrats want money to go to banks, not banks, I'm sorry. They want money to go to hospitals.
Mm-hmm.
They want them to, yeah, well, they want whole new programs to fund hospitals, to fund state governments, county governments, and a few other things. And the Republicans, for all week have been saying, no, 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 it was looking really not great. The House Minority Leader came out this morning because, everything changes on an hourly basis. And let me see if I can find what he said. Because the Republicans have moved a little bit, and they are saying that they are willing to expand access to the loans to hospitals so that they can do that. So there is some movement. However, this has been pretty partisan, and Congress doesn't come back in session until May 4th. There are some discussions about so most of Congress has gone home and they're sheltering in place like everybody else. There is some discussion about letting the members that are still in DC vote their proxy.
Okay.
But that hadn't happened yet. And
Okay.
Congress isn't going to be back in session until May 4th. And how long did it take to pass the CARES Act?
Yeah, way too long.
Yeah. So my guess is that the money won't start flowing again until like mid-May. What do you think?
I think mid-May would be optimistic, but let's say mid-May.
Okay. I think the really important thing to remember is this is also very obviously a FIFO situation. The people who got their applications in early have already gotten their money. So like I got funded yesterday. I got my PPP money.
Right. So I think what I'm reading from the variety of sorry, you're out of luck emails that clients have received is that they're retaining the queues on a FIFO basis within the banks. Mm-hmm. So if you did apply, they are not going to forget about you. But if funding reopens, that they will advance your application.
Yeah, I think if you're in process, then that's great. You don't need to apply again. I do know a number of people that applied through multiple banks, which I think is really interesting because one of the, not certifications, what did you call it on the EIDL loan that you have to make?
Yeah, oh, now you've got me looking for a word.
Yeah. Anyway, one of the questions you're asked on the PPP application is, have you applied anywhere else? So I'm not quite sure how people are applying at multiple banks and answering that question. However, I'm in a group on Facebook where I know the vast majority of the people that
representations, that's what I said.
Representations, there you go. And one of the people said that they had applied at 3 banks. And one of the banks said that their application was rejected. And the SBA is set up, if your EIN number, which is basically your business's social security number, if your EIN number is already in the system, they will kick out any other application that comes in with that EIN number. So going and applying somewhere else now, just because you haven't heard from your first bank, isn't going to accomplish a whole lot. Okay. I have one more opinion about the PPP. I think there are going to be more strings attached to this next group of loans they fund. What do you think, Pam?
Yeah, we've heard some stuff about certain industries and certain zip codes, and hopefully Congress won't get too many strings attached, because it's been complicated enough as in the first round.
You think that's complicated?
Yeah, I will though on the applying in more than one place.
Yeah.
I'd just like to go back to that, because I think that yes, they're going to kick it out once your financial institution sends it to the SBA. Mm-hmm. But what I've observed is the vast difference of the successes of different kinds of financial institutions to handle it internally that has negatively impacted their customers. You know, and we've talked about this, that some, and I think the press has widely reported that the larger banks weren't being that responsive. And I think they got, I think there was some leaked video or something from one SBA official that said, you know, they took all this money in 2008 and now, you know, Main Street needs help and they're not helping out. But I saw some, you know, and we saw a lot of success from regional banks or credit unions. But even some of those didn't respond quickly enough and didn't have their internal systems, couldn't get up to speed fast enough. And I think that hurt some of their clients. And so I also had several of the people that I work with that applied multiple places. And what they found was nothing got kicked back because the first place they applied to, which happened to be one of the larger banks, didn't even get it to the SBA. But these other more nimble banks that they had relationships with were like Johnny on the spot, you know, they're more high tech and whatnot. And they took care of business. So,
well, and I don't know if it's actually more high tech or if it was that they had a smaller number to deal with and they could push them through manually faster.
Whatever process they used, I think people today are reevaluating their banking relationships as a result of PPP because some banks service their customers much better than others.
Yeah, and I wanted to talk about this a little later on, but we're on the topic, so let's talk about it. I am in EO, and there was a guy in EO who always said you need to have good relationships with 2, if not 3 banks at all times. And this would be a great example of why, right?
Absolutely, because that whole process, if you went with somebody that you didn't know, they had to validate you, you know, and vet you. And if you had a bank that you already knew, you didn't have to go through that step. So he sped it up. But I know people that had existing banking relationships and actually reestablished themselves with others and got it funded in days where others were, I mean, I think
the original bank hadn't even called them back yet about it.
Right. Or they sent them an automated reply that says, we got your application, and then didn't do anything with it.
Yeah. Now, I will say, I know someone who Chase opened up. She got an email about it last Saturday. Took her 8 tries to fill it out on their, you know, online thing because it kept crashing. She filled it out. She got approved on Sunday or Monday and funded on Tuesday. She's the only person I know that's gotten money from a big bank.
Yeah. So who knows what it is, but I think today people are reevaluating their relationships and I can see this impacting certain banks' relationships with small businesses, but I digress. So please continue, Brooke.
Let's go. Hey, it's all the conversation that we want to have, right? This time is all about making sure that we're discussing what we need to be discussing, because it's not just the applying. It's not just getting the money. It's what we do with it. It's how we do it. It's a pretty all-encompassing discussion. All right, so let's talk about PPP forgiveness. So remember a little while ago when I said there were some slides in here that were, I really had so that I can give them out, not so that you guys get the information here. So I'm just going to tell you right now, do not read this next slide or like the next 5 or 6 slides, because they'll give you a headache, I promise. Further disclosure, this is the actual wording from my closing documents from my bank. So I want you to understand what the banks are using. Every set of loan documents will be slightly different, but here's the language from mine. All right. So permissible uses. Basically, it says only use it for things authorized for the PPP program and the CARES Act, and don't do anything illegal. Okay, again, scary slide. Here's what I really want you to take away from this. Provided to lender documentation of such application of proceeds. And the other phrase, as determined by lender in its sole and absolute discretion. What this is saying is that the bank is the one who's going to audit the way you spend the money and make the decision about how much forgiveness you get. Every bank's going to be slightly different. They just are. I was on a call earlier and it was so interesting because we were talking about this and the fact that every bank's going to have a different definition of everything.
We saw that with the applications, right? Every bank, there was not consistency in what they asked for in the applications, and there's not going to be consistency in what they ask for in the forgiveness.
Yeah.
You know, I'm gonna just let the people who are listening in on the call know that if you have questions, please put them in the Q&A section. If you have the chat room's also open, so please engage with us as we go throughout this.
Yeah. Okay, so one of the examples that I want to talk about where the bank is making the decision, if you slow walked your rent this month, which we told a lot of our clients to do, like don't write your rent check on the 1st, because if this money's coming in, we may be able to write the rent check, like I'm writing my rent check today, and get it in that forgivable amount. However, if you do this, you might have 3 rent checks in the 8-week period. Bank A could say, yep, totally fine. You had that commitment and you paid it. Other banks may say, 8 weeks, only 2 rent checks. So, and one of the things that as you read this, you'll find out that their definitions are not very detailed. They're pretty broad. All right, the next one, 2 things I want you to notice. The February 15th date, anything that you're paying for that is a fixed cost must have been negotiated and in place by February 15th. So this means that if you moved into new office space on March 1st, if that rent, if the contract wasn't signed before February 15th, if you didn't sign it until the day before, it's ineligible. Same thing for phone, internet, utilities. Everything has to be dated before, all obligations before February 15th. The other important thing is the 8-week period following the disbursement of the loan. So it is literally 8 weeks, 56 days. Day 1 is the day the money was dispersed. So for me, day 1 was yesterday, and I've got 8 weeks. I've got 55 days now. Okay. This is the really important slide. This is what is considered an okay expense. So payroll, you notice that all they say is payroll costs.
Does that include payroll taxes?
Well, we've had this discussion how many times? 42,000.
Right. And so what we've decided is put more in and have the bank say no to it, rather than put not enough in.
Yeah. Going back to the original legislation, we feel fairly confident that the employer portion of federal taxes is going to get kicked out.
Right, because they don't want to forgive for what you're paying them, because it's kind of like they're getting hit twice.
Yeah. All right, the second permissible purpose is healthcare, your mortgage obligations. And so what's really interesting is that this says mortgage obligations. A lot of the wording that we've seen has been mortgage interest, but this is actual mortgage obligation. Rent, utility. Let's talk about utilities, Pam. Like utilities are gas, electricity,
Electric, water, sewer.
phone,
Mm-hmm.
internet. I think banks are I think the scrutiny when these things go for forgiveness is going to be much more on payroll and much less on, well, I don't know if your cell phone's really a utility.
Right. I think that they're going to look to see that you check that 75%'s been spent on payroll costs, including benefits. And then they might scrutinize a little on the mortgage and the rent. But beyond that, I don't think things, unless they're material, right? Unless they catch their eye. I think that,
I do think this next one is one that people might try to game, right? So interest payments on any other debt obligations that have the magic date number of 215, right? And a question that I got was, does that mean that I can use the PPP to pay for the interest on my credit card because it's always maxed out? You know, it's got a $30,000 limit. We put about $30,000 a month on it. It's always at the limit. We're paying it off during the month so that we can get more stuff charged.
because I want my points.
Oh yeah, everything goes on my card. So here's the thing. That also runs, in my opinion, on LIFO. I mean on FIFO. First in, first out. So that first dollar you charged is also the first dollar you pay off. So my opinion is, if you're rolling through it every month like that, that the money probably isn't pre-215. That charge probably isn't pre-215. But if you've got a credit card where you charged it up to the limit, but you're actually using another card for stuff and it's just static and sitting there and you're slowly paying it down, or it's just sitting and you're not even paying it down, you're just paying the interest, I think that'd probably apply.
Yeah, and again, it's going to be up to your bank, but the majority of the money needs to be used for the intent of the program, which is paycheck protection. And as long as you focus on that and you haven't had a lot of change in the makeup of your employee base, then you should be fine.
Yeah. If you got an idle between January 31st and April 3rd, you can actually pay it off with the PPP. Okay. Let's go to the next one. Okay. And this one is what I think is so interesting, because they keep saying that the idle grant is a grant. If you have an idle grant and the PPP, that idle grant wasn't a grant. It was an advance, because it's going to be subtracted. So let's say you got a $100,000 PPP and you got the $10,000 grant. Your max forgiveness on your PPP is only $90,000. It's the 100,000 minus the 10,000. So I think that's interesting. Oh, I do want to talk about, Pam, can we talk about FTEs? Because that's a big thing. So you've heard that, I think everybody knows that we need to spend 75% of the PPP money on payroll.
Mm-hmm.
But there's another aspect that, interesting, was not in these documents, but which we understand to be true, that it's all about your FTEs, your full-time equivalent count. And if your FTE falls by, let's say, 17%, then the amount of your PPP that is eligible to be forgiven is also reduced by 17%.
Right. So I think what we're talking about is that there are different metrics that a bank might use to do proportional forgiveness. Right. So I think if you don't hit the 75% and if you don't maintain your FTEs, you could have fractional forgiveness, not 100%.
Yeah. And let's talk about what an FTE is. Because you and I throw around terms that I don't think everybody knows. So an FTE is a full-time equivalent employee. And the way you get your FTE is not the head count of your employees. It's adding up how many hours each employee works per week, getting your total for your whole company, and then dividing by 40. Okay?
So 2 half-time employees equal 1 FTE.
One FTE. Yeah.
So if I have 2 part-timers.
And interestingly, so our company defines a full-time person as anyone who works 30 hours, which is in line with the family, whatever. What is it where you have to give medical leave?
FMLA.
FMLA, which is in line with the FMLA. Interestingly, a lot of people are saying for this that it's actually just the it's the 40 hour. And I know that someone just wrote in and said that they understand it as the 30 hours is the 40 hours. I think honestly, you're going to need to clarify that with your bank, because there are a lot of different there are a lot of different questions. No one has really come down and said what it is. I think if yours is 30 in your company like ours is, you probably have a really good case to say, 30 hours is an FTE for me.
I think that they're looking for, if you have been consistent in applying it, right, from your application where you represented that you had 10 FTEs, if you're consistent in using that with your request for forgiveness, I think that goes a long way. Where I would have trouble if I were the banker would be that you choose the advantageous one for the application, a lower one, and then a higher one for forgiveness, right? If they think you're manipulating it, they're going to call a foul on the play.
Absolutely.
So I would be consistent with whatever you did for the application you do for the forgiveness.
I think that's great advice. Also, there has been some discussion about when that FTE, that original FTE period was. They've come out with 2 different original FTE definitions. One is your average number of FTEs from February to June of last year. And then the other one is how many people you had on January 31st, I think.
Yeah.
And then when you start to do that comparison to this year, it is your average FTEs for the 8-week period. So I know there's some people who are like, well, look, I can get the money and then I can rehire someone on the last day of June, or the last on, of the 56 days, I can rehire them on day 55 and get it forgiven. Well, they're really not going to count, but for one day. So we just had another question about the June 30. June 30 is the last day of this program. If you got your money, so this particular person got funds on April 9th, your 56 days started on April 9th. So you're not going to make it to June 30th. However, the February through June average FTE from 2019 is that's set, and the your FTEs for this year is during the 8-week period, those 56 days. Okay. Let's see, what's next? Best practices. I think we may have covered some of these. Oh, no, we haven't. Pam, what are best practices?
So there's two schools of thought here on what you do with the money when you get it. Brooke and I both agree that it's best to put it in a separate balance sheet account. Brooke thinks that that separate balance sheet account should be backed up by so I think you need to just change your chart of accounts, add an account, where Brooke thinks that you need to do that. Plus you need to open a separate bank account.
Yeah, I'm a fan of a separate bank account.
I don't like that because it brings up all kind of mechanics. So let me just take a step back and talk about the separate balance sheet account. What I would do is set up a separate balance sheet account, so a liability, and then I would reduce the liability for the next 8 weeks with all of the expenses that you think are forgivable, right? So I'd put my payroll costs not to my income statement. I'd put it against my liability. I'd put my rent against that. I would put it all over there. So when I had to go in and produce the forms for the bank, I would have it all in my general ledger, and I could check to make sure I wasn't forgetting anything. Okay. And then I would know if I had spent the money or not. Right. Yeah. If I had to open a new bank account and run things through there, that would be chaotic because I'd have to do it differently I'd have to change something with my payroll firm. I might have to get new checks and write checks or do ACHs to my landlord. For 8 weeks, my opinion, it doesn't support the administrative hassle of a new bank account. Now, Brooke, why do you advocate for a new bank account?
Okay, so I advocate for a new bank account partially because we have had clients and we have seen a ton of people who are not very financially disciplined. If the money's in their account, let's spend it. And
right, because if you have a big balance, you feel richer, right?
Oh yeah, you feel very rich. And so we want to avoid the rich feeling because we want to make sure that we don't actually spend the money on stuff that's not eligible for forgiveness.
But the thing about being rich is you end up spending the money 3 times.
Yes.
You don't just spend it once. You feel rich, so you have an extra this and you do an extra that and you order an extra that, and before you know it, you've spent the thing 3 times on things that are not relevant.
And now you can't pay for the things that are. One of the things about me is I do listen to the team, and I really want to make sure that, I mean, every day's a learning experience for everybody, for everything. So the discussion I had this morning, and Pam doesn't even know this, with my own bookkeeper was, we're doing a hybrid of my original payroll needs to come out of this separate account. Yeah, I know. You can say I told you so. And Pam's put it all on the balance sheet. So we're doing a combination of the two. I have the money segregated in a separate bank account. It will be transferred into operating to match those expenses that are coming in. What we have not quite decided yet is if we're going to put the loan on the balance sheet and do some kind of journal entry at the end of the period to wipe it out when we get forgiveness, and put the charges on my chart of account on my income statement under like coronavirus accounts. We said change your chart of accounts. So we may do that, or we may do exactly what Pam suggested and debit down that the loan account on the balance sheet. But whichever way you do, whatever you do what works for you, but also get all that paperwork, all those backup documents in a file, so that if they say, well, why was your rent this amount?
Your lease agreements, your bills from, your utilities,
AT&T debited my account today for one of my phone bills. So I need to go through and find that paper bill wherever it is and shove it in the account. Because yes, I am the last person on earth that does not do all electronic. If it's electronic, you're going to be easier to find it. Okay. Pam, we have spent way more time talking about other things than we thought we would. All right. What is the plan? Pam, you want to talk about the plan?
Yeah, so a lot of businesses have gone into this, and some people, are really in survival mode, right? So the money coming in and spending it and rehiring people, is their plan. Other people, it might be excess cash flow for a period of time. And what we want to do is we want to engage with people. And, again, if you're on this call and you're not a client of ours, we're happy to have a conversation with you one-on-one, to challenge you on how you're going to use additional funds and what you're going to invest in to ensure your company post-COVID-19 is stronger than when you went into COVID-19. And talking about what are some of the lessons. Right now we're reworking profit plans with budgets.
I was going to say, hold on. No, people don't know. We don't believe in budgets. We think they're restrictive and yucky and nobody wants one. We do believe in profit plans, which look pretty much identical.
Right. So, some people want to, some people have finally learned the lesson of you should always have 6 to 12 months of cash available. And so they just want to squirrel away money because, hey, this has been a horrible experience. I want to live a life without compromise going forward. And so they're going to put that away. Other people are investing in more jobs. Some people are investing in marketing. But it's really important that you take another look at what your plan is for the rest of the year, because there's a lot of, it's just all jumbled because of COVID-19. There's some things you probably learned that you've invested in. I know a lot of my clients who had more idle time have been documenting like crazy to create content for their social media, or they've developed policies and procedures because they have finally time to do that. So I think there's a lot of things that can go into, what will your company look like post COVID-19? Where are you going to invest? And how are you going to emerge stronger than you went into it? Like anything, it's going to take consistent monitoring. And again, there's everybody, you got money in your pocket, you might consider, and again, we're happy to talk to you about this offline. A lot of our clients do profit first, and that's a method to put things away for a rainy day and to actually make sure you as an entrepreneur have the funds available both for the business and for your personal aspirations.
I think that consistent monitoring is great, Pam. Like, what is this company going to look like? I know that you helped one of your clients to take his company online. Like, he wasn't set up to do that. So even though you actually have been telling him that for a couple of months, but
he heard me for the first time, but I think that it's forced us to relook at a lot of things, and as much as COVID-19 has created a lot of hardship, I think it's also created a lot of opportunities that if you take a moment and you look for those opportunities, that you can emerge stronger than you went into this. And the clients I see that are doing that are going to be very successful, that don't look at just all the negative, but see the opportunities that are embedded in this journey.
I heard somebody say something earlier this week that I thought was so good. He said there are glass half empty and glass half full people. If your glass is half empty, pour it in a smaller glass.
Or call us and we'll show you why it's, there's always positive things out there. What else we got here, Brooke? Because
we are running out of time, and I know we've got some questions. So what's the upside? And I'll just cover this really quickly. And this is about pouring it in a smaller glass and looking at a glass half full. Like, how is this changing your relationship with your clients? How is this changing your relationship with your employees, your vendors? And then just relationships in general. Pam, you talked a bunch about bankers.
Mm-hmm.
And I think that's huge.
And I think what this means to me is that now is a time, an unprecedented time, that everything's on the table. So you can renegotiate just about anything right now because there's so many moving pieces. So as you go through those things, don't hesitate to think if you can renegotiate your deals with your clients, your employees, your vendors.
Yeah, I mean, if you're cash strapped and your client isn't, give them a 10% discount and have them prepay. If you're in a situation where you're renegotiating your rent, this is a great time to renegotiate your rent. Okay, let's look at the next item. So this is the one that was announced 4 hours ago. Four hours ago. We got it in here. Okay. So this is the Main Street new loan facility, the MSNLF. And it's really made for larger companies. It's small to mid-sized businesses, where the PPP is just small businesses. So you're going to see some bigger numbers in here. It's 10,000 or fewer employees, $2.5 billion in revenue or less for 2019. You have to have been profitable before the coronavirus. You have to have significant operations and the majority of employees in the US. The minimum loan size is $1 million.
Oh, sign me up for that one. I'll take $1 million.
And it is cheap money because it's got a 4-year term. I think it's 1 year before they start repaying, right? Mm-hmm. No payments in the first 12 months. So you've got 3 years to pay back that $1 million plus. And your interest rate is 2.5% to 4%. And is that floating?
Yes, I understood it was variable. And this is accessed again through your banks. This is a Fed program, and the Federal Reserve is standing behind your bank. And so, again, just much like the PPP, you have to talk to your lender. There's some restrictions about some other programs that probably most of us aren't even aware of if we are or not participating in them. But I think this is the approach that they're using to address those medium-sized businesses, because they're like, hey, what about us? So I think I hope we answered the question about the Main Street lending program with this slide. So we haven't read anything that if you got the PPP, if you're excluded from this, but it seems not to be designed so much for truly small businesses, whereas the PPP was. Someone else asked about if we have a primer on applying for PPP as a 1099. Yes, we have some information on that, and some new guidance came out this week. Again, it's also the same bucket of funds that expired. It's done through your bank, and they're going to look at your 1099 and your IRS Schedule C, right, Brooke?
Actually, there's they want to look at your adjusted gross income on your
tax return.
That's the line item that they're going to want. So you take that, you divide it by 12, you multiply it by 2.5, and that's your number.
So again, if you haven't applied or been granted that, and that's another bucket that they might roll out with the new PPP, because the independent contractors were denied access to those funds until last Friday. So all the small businesses went ahead of them. So I imagine that if I were guessing, I would hope that maybe they carve out a piece of the new PPP for that segment to give them a shot and not have to compete with businesses that, quite frankly, are far more financially sophisticated than the average 1099 person is.
Yeah. And there was a follow-up question on that. What if I started 1099 operations only in 2020? I don't know how you document that. I mean, I guess.
Yeah, I don't know. So I have heard, and this is on a separate call today, that some 1099 people have been claiming unemployment, and that employers are disputing those unemployment claims because they're allowed access to the PPP, and that it's contrary to their philosophy that either you're a W-2 or you're a 1099, and they think that if they don't dispute it, that you might be, they might get challenged on their contractors that they're all W-2, and then it creates a whole new, they could be at risk for 5 years of payroll taxes if the government comes back and says, you know what, these people were never W-2 and never 1099s, they're W-2s, and thank you very much, here's a bill for 5 years worth of payroll taxes. So don't be surprised that if you try to go the route of unemployment, that you might be challenged by the person who
you're claiming against.
Yeah.
But I'll look into the 1099 only in 2020 and see if I can get you some information. We've got a couple of other questions. We've had some that were sent in beforehand. There's one from Gail. She laid off 3 people on 3/16 before there ever was a CARES Act. If I do not replace those, will I be pinged on my loan forgiveness? Is the idea to replace FTEs in general, or is there an expectation you will bring back those specific individuals? Yeah, no, just FTEs in general. So you can bring those people back, you can trade them out for better people, whatever it is. One of the things that somebody pointed out was you could also get rid of 1 FTE and hire 2 part-time people, get rid of 1 full-time person and hire 2 part-time people that may have a higher skill set. There was another one. How are we doing on time? We're a little over.
We're a little over. So how many more questions you got there?
I've got like 3 or 4 more. A couple of them we've already answered, but can you pay a bonus and have it be forgiven? So I think this goes back to the bank. What does your bank say? I think if you have, we've got a lot of clients, for example, that have a quarterly bonus program. It's documented, it's been around. I don't think that's going to be a problem. If you all of a sudden get a whole bunch of PPP money and you give everybody a $20,000 bonus, yeah, I think as Pam says, that's not consistent. So you really kind of need that history to be there. Can you bonus only the owner? So, if the owner consistently gets a bonus every quarter, yeah, maybe. And remember, that's a W-2 bonus. That's not a
distribution.
That's not a distribution. Distributions do not count towards any of this. I think the other thing to remember is salaries are capped at $100,000. So in this 8-week period, you cannot pay any one individual more than $16,666. Now, let me rephrase that. It's not that you can't pay them. You can only get $16,666 of what you pay them forgiven. There was a question about the 8 weeks. We've talked about that. Can you prepay salary? Yeah, probably not. Though, Gail, I know that you had some people that took pay cuts, and you might be able to bring them back up to their salary levels during the PPP period, and then cut their pay again, maybe more drastically for a short period after the PPP, and then get them back to where they are currently. All right, there is one other One other thing on the FTEs, just kind of going through the questions. You can fire an expensive person and hire a less expensive person. So you can hire that $120,000 full-time person and hire somebody for 60, and it's still an FTE, you're still good. And then there is one other program that people might want to know about. It's called the Lift Fund. And that may only be available in Texas. And it is in conjunction with Goldman Sachs. All right, and then there's another, what happens if I furlough people deeply at the end of my 56-day PPP period? Okay, so let's kind of dig in on that for a minute. So furlough, there is no legal furlough. They're either employees or they're not employees. Furlough is something that was kind of invented by the health insurance industry. So can you fire your people at the end of the PPP period? Absolutely. Yes. Once you get to the end of that period, I wouldn't fire them on day 56. I would fire them on day 58, or, you know, put them on, if you want to say, you know, temporary furlough, meaning I'll bring you back when we have the money, you can do that. Just be aware that some insurance, medical insurance things say, if you furlough someone, you are responsible for paying their insurance costs. So that's what that is.
The Lift, I just Googled it. The Lift Fund seems to be largely in Texas, but a number of other southern states, but does not have any locations up in
your neck of the woods?
Neck of the woods. I think it goes like Kentucky, Tennessee south, and a little bit west into New Mexico and
Okay.
Oklahoma, a little north from you. But yeah, it seems to be predominantly Florida's part of it. But you can look at that, and I don't know much more about that. But what we found, and this is something that everyone should look at, is that oftentimes there have been other programs that are available in your local area that might benefit you as well. We found some on the West Coast. We found some on the East Coast where specific states who've navigated through the governor's sites have additional funding available. Sometimes they piggyback on an SBA loan, and sometimes they just run parallel. So don't forget to look at your governor's or your state's websites.
Yeah. Okay, so I think we've got all the questions. If nobody else has any other questions, Pam, is there anything we've forgotten to say?
Well, I'm sure, but I don't know if our listeners care. So again, Brooke, if you want to summarize, because we have more programs coming up, and you know, we're happy to talk offline. Just email either Brooke at cathcap.com or Pam at cathcap.com. But did you want to speak about our up and coming programs?
Yeah, I would. I'd love to. Wait, we just have one last question come in. Can you pay yourself higher than last year's payroll number? So you're maxed out at that $100,000 a year, that $83.33 a month. Can you up your salary? Yeah, Pam, what do you think? They're really looking at the FTEs.
They're going to look at the FTEs, and you know, here's the thing: is there going to be any kind of a flag that's going to have your bank look a little deeper? They're going to get the detailed reports. So if you do something egregious, you might be provoking inquiry. You know, if you're just tweaking something to get maximum forgiveness, you know, again, materiality comes into play. But again, these are people that you have a relationship with. And so understand that whatever you do, if you can explain it, if you can talk them through it and you have a good story, okay. But if it smells like manipulation and they start asking questions, as much as that goes to whether you get this forgiven, it goes to that relationship too.
Yeah. I think that last year, if you didn't take a salary and this year you're taking $100,000 salary for 8 weeks, yeah, like you weren't on the payroll in January, February. If you're raising it from 75 to 85,000, yeah, I don't think anyone's that's not gonna be a big deal. Okay, so Pam, yes, to answer your question, so we are trying to do 2 events a week because there's so much going on. We're doing a Facebook Live on Tuesday, and if you connect with us on Facebook, cathedralcapital.com, not cathedral, sorry. If you connect with us on Facebook,
Cathedral Capital, yes.
So we've got that happening. That is with Hector Quiroga, who is an attorney out on the West Coast, and he is so taking advantage of coronavirus. And he's one of those ones that Pam was talking about that's going to emerge with an incredible company. He was great going in. He's going to be exceptional coming out. So
exceptional at executing. So I enjoy listening to him because he's very passionate and he's very successful.
Yeah, and he is a serial entrepreneur. And one of the things that I really admire about him is, unlike other serial entrepreneurs who are like, oh, shiny object, oh, whatever. He executes, he's focused, and he's going to talk about how it is that he does that. So I think that's great. And then on Friday, Pam, are we going to do another Facebook Live on Friday?
Sure. We like Facebook Live.
I like Facebook Lives. We didn't do one today, but we're going to do a Facebook Live on Friday about cash flow forecasting and how to use it in this period of turmoil, and why it's helpful. And then also like how to do one. And we're going to we will send everyone that wants one an actual cash flow forecast that's set up, that's ready to go. You just plug your own numbers in, and it will help you look 6, 8, even 12 weeks in advance. So you know what's coming down the pike, and you can better hold on to your cash so you don't, as Pam said earlier, spend the same dollar 3 times. So, all right. Thank you guys so much for coming. Really appreciate it. And as always, if you have questions, you can find us at capcap.com, or Brooke at capcap, or Pam at capcap. Thanks so much. Bye.